We've heard that it's very unpopular, this new GOP tax law, but we've also heard that most Americans, 80%, are getting tax cuts. So what is the lowdown? What's going on here?
Yeah, San Diego State University accounting professor Dr. Steve Gill is on the KOGO News Live line. Good morning, doctor.
Good morning, Ted. Good morning, LaDona.
So,
Good morning.
In real life, there are winners and losers. So who actually loses in this new law?
Well, the good news is most of us win. However, if we had to sit down and select some of the folks who might be on the wrong end of this bill, sadly, Southern California and San Diego in particular is probably in the sweet spot. Because we have higher housing costs, we have higher state income taxes, the limitations on those itemized deductions probably affect us a little deeper than most of the rest of the country.
Okay, so, and how exactly?
Okay, so what's happened is, typically if we itemize our deductions, we can deduct our property taxes, we can deduct our state and local income taxes, and we can deduct our mortgage interest. And all those things are very closely tied to the cost of housing and, of course, the taxes in California. Those are all limited now. So the mortgage interest deduction is now limited to mortgages of $750,000. And property taxes and income taxes are limited to an annual deduction of only $10,000. And it doesn't take very long in San Diego to find your way to $10,000 worth of property and income tax.
Okay.
All right, so which tax brackets will get the most help?
Okay, so actually quite a few. Again, across the board, most of us are going to see a rate cut. And so that's the good news that helps offset a little bit of those problems. Certainly, the folks that are going to see the biggest dollar amount are the high-income earners because, frankly, they've been paying the most tax, and they're going to see the most savings as well. Someone in the $40,000, $50,000 income level, they're going to save a couple $100 this year, a couple $100 next year. If you're between $100,000 and $200,000 worth of income, you could save a couple $1,000s.
What if you're over 200?
So if you're over 200, you're still going to save money. And as the income rates go up, you're going to do better and better. But there are some bizarre changes in the new rate table. So, for example, some single folks who make between, let's say, $150,000 and $300,000, their rate is actually going up as opposed to down like the rest of us.
That's what we figured. Well, that's the way it goes. Okay, so now will these changes affect our 2017 taxes? So, is the IRS right now working on guidelines to put this into effect immediately, or is it for the next tax year?
Yeah, so almost all of the tax provisions are prospective, meaning they're established to start January 1st of 2018. There are a small number of the business tax provisions that actually extend back into the year, but those are fairly complicated and aren't going to affect most people unless you operate a small business.
Okay. All right. We will, I'm sure we'll keep learning about this. And thank you for the tutorial, Dr. Steve Gill. We appreciate it.
All right. Thank you, guys. Have a great morning.
All right. You too.